The views we interpret today are from the latest research report by Morgan Stanley. Analysts at Morgan Stanley pointed out in the report that India's spending on energy imports from the U.S. is likely to hit $30 billion by 2030 expected. India is the third largest importer of energy in the world, with slightly less than half of its net energy needs being imported at about 18 exajoules. Morgan Stanley analysts forecast India's energy demand to rise at a 4% CAGR by 2028, among the fastest globally, and they see potential for 30 BN in U.S. energy imports by 2030. In 2024, India imported $155 billion in energy, which includes crude oil, natural gas, ethane, and LPG, a tenth of which came from the U.S., while two-thirds was from the Middle East. India is the fastest-growing energy market globally, and Morgan Stanley analysts forecast it will need 2x its current requirements of LNG and 33% more ethane, 30% more LPG and crude oil in the next 5 years as refining and petrochemical capacity grows and domestic demand rises at a 4% CAGR by 2030 expected for energy and 8 to 9% for chemicals. U.S. Henry Hub-linked gas is about a quarter cheaper than spot LNG, while U.S. ethane and propane help lower the cost of petrochemical production for local use. Morgan Stanley analysts estimate potential for U.S. energy imports to double from the U.S. by 2030, 15 BN in 2024. To put things in perspective, India runs a trade surplus with the U.S., which tracked at 41 BN in fiscal year 25. However, it should be noted that the views in the research report are for investment reference only. Market conditions are complex and volatile, and investment decisions should be made in light of your own risk tolerance.